Ladies and gentlemen, good day and welcome to the Q3 FY23 earnings conference call of Man Industries Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Man Industries India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter and 9 months ended of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings con call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Ramesh Mansukhani, Chairman. We also have with us Mr. Nikhil Mansukhani, Managing Director, and Mr. Ashok Gupta, Chief Financial Officer. Without any further delay, I request Mr. Mansukhani to start with his opening remarks. Thank you, and over to you, sir.
Yeah, thank you, Anuj. Good afternoon, everyone, and welcome to the company's earnings call for the third quarter and 9 months ended financial year 2023. Let me begin by giving you a brief of the consolidated financial performance for the quarter. We reported revenue from operations of rupees 658 crores, which increased about 4% year-on-year. EBITDA stood at 59 crores with EBITDA margins at 8.93%. We reported a net profit of 37 crores, which grew by about 19% on a year-on-year basis. The PAT margin stood at 5.65%. Coming to a consolidated financial performance for the 9 months of FY23, our revenue from operations stood at 1634 crores, representing a growth of about 7% year-on-year. EBITDA stood at 96 crores with EBITDA margin reported at 5.9%. Net profit at 42 crores, while PAT margins were 2.57%. On the operational front, the growth in revenue in this quarter was mainly driven by timely execution of the projects, which gives us the confidence of achieving our yearly targets. On the capex front, the installation of our ERW steel pipe project is also completed, and the trial runs are expected to start the coming week. The work of the induction bending plant is likely to be finished by March 2023. The stainless steel for the seamless pipe project is also progressing well, with orders of major long lead critical equipment from Europe and Japan already being placed. We continue to have a robust bid book of more than 18,500 crores at various stages of evaluation for several oil, gas, water projects, both in domestic and global markets. Lastly, to give you a brief update on the industry scenario, as per the recent budget outcome, India will pursue a diversified energy strategy to meet experimental demand growth in the coming years that will witness a sharp rise in refining capacity, a big push towards exploration, and a shift to a gas-based economy and a zero carbon fuel. There is a huge potential for India's oil demand share rise to 11% in the global market in the coming years from 5% currently. India's gas demand is expected to grow over 500% in the foreseeable future, as India had set a target to raise the share of gas in the country's energy mix to 15% by 2030. The country's regasification capacity is set to expand considerably as new terminals and proposed pipelines are being planned. Data shows that India gas pipeline network has risen 22,000 kilometers currently from 14,000 kilometers in 2014. In the next 4 to 5 years, it should reach around 35,000 kilometers for oil and gas sector, and a lot of capex will also come in this sector. Overall, the next 5 years in the Indian oil gas market is expected to register CAGR of 5 to 6%. To catering to the rising demand of oil and gas majors are planning to increase their capex to develop a network of line pipes. Additionally, an outlay of 1 lakh crore has been earmarked for the drinking water program in 23-24 up to, which was 60,000 crores earlier, which will bring in strong demand in the piping industry. With the revival in demand environment and our strategy to diversify our product portfolio, we are confident to scale our business to new heights in the coming years with sustainable and stable profits. With that, I conclude my opening statements, and we can now open the floor for the question and the answers questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Vijay Kumar from RM Performance. Please go ahead.
Yeah, thank you. Hi, Mr. Mansukani. Congratulations for a good result. I wanted to ask about the financial interest cost in the quarterly result. So this quarter, the interest cost is 12 crores, and previous quarters, the interest cost is 9 crores. So your annual interest cost is around 40 crores, and you have a debt of less than 100 crores. So how is it possible? Can you please explain the interest charges?
Yeah, Vijay Kumar, good afternoon. I'm just passing over to our CFO,
Right.
which will try to satisfy you. Most of the fund cost increased because of the rate of interest RBI increased, as well as to some new jobs we quoted, we have to give the EMD, etc. But Mr. Ashok Gupta will explain much better way.
Sure.
Over to Ashok Gupta.
So, Mr. Vijay, for September 22, the interest cost was about 9.2 crores, as against 12.1 crores in the current quarter.
Yes.
The increase in mainly because of the increased operations. You can see the top line is increased from 465 crores to 658 crores. So
Yes.
one reason for increase in interest finance cost is basically high utilization of our working capital limits, as well as you know that Reserve Bank of India is increasing the rate of interest very often now. So some of the impact is because of increased rate of interest in the finance cost.
So, sir, what is the debt on balance sheet and what is the average interest rate you are paying?
Pardon?
What is your total loans on balance sheet and what is the interest rate you are paying to the bank?
The long-term debt is about 165 crores, which is basically taken for our upcoming new project of ERW. Over and above that, we have a fund base, this working capital facility of 1,500 crores.
Okay. Thank you very much.
All right.
Thank you. We have our next question from the line of Rahil Shah, an individual investor. Please go ahead.
Yes. Hello, sir. My question is just regarding
sorry to interrupt. You're sounding low, Mr. Shah.
Hello. Is it audible?
Yes. Yes.
Please speak loudly.
Yes, sir. My question is just regarding the outlook for the FY24 in terms of revenue and margins. How will they sustain and how are things looking for the next year? If you have anything on that.
Yeah, because to 23 we are computing the EBITDA average coming from 9 to 11%, depending on project to project, quarter to quarter, and we are going to improve because some new project is the ERW is going to start very soon. The trial is expected next 2-3 weeks, and some value addition, coating and bending, etc. we are going to complete next month. So 23-24 will be higher value addition we are expecting.
Okay. So, so overall, you see that trajectory like going up and maintain the current run rate, like what we are seeing in terms of margins.
Okay. Thank you, sir.
Mr. Rahil Shah, does that answer your question?
Yes. Thank you.
Thank you. We have our next question from the line of Anirudh Shetty from Solidarity Investment Managers. Please go ahead.
Yes. Hi. Thanks for taking my questions. I had a couple of them. So my first question was, I wanted to understand what was the status on Merino shelters. At this point in time, what stage of this thing arrangement are we at? And also, if possible, could you also quantify, how much we could possibly get out of, this sale? Like, how much are we expected to pay the lender, and what is the value of the real estate? So if you could give a sense around how much we can get, that will be very helpful.
So we've already, Anirudh, we've already closed the transaction, in the sense signed the document and given an advance to Piramal for Merino. Closure date with them is 31st of March due to the documentation and everything. So it should be completed on or before 31st of March. On the second point which you asked, the valuation of Merino, what amount we should get. Reasonable to good market value should be anything between 125 to 150 crores.
Got it. And how much are we expected to pay the lender here? So how much is the net value Man Industries is expected to receive?
So we have to pay them in total 70 crores, out of which 15 has already been paid.
Got it. And the Karnataka land, I believe we would have sold it by now. So how much have you received from that, net of taxation?
And payment has already been received.
Got it. And could you quantify how much we would have received from that sale of land, net of tax?
So approximately 40 odd crores.
Got it. And the last time we had spoken, you had mentioned that we're looking to settle with SEBI. So is there any update on that right now? And in case there could be any penalty from SEBI, could you also quantify how material that could be?
So settlement has already been filed with SEBI. It's under process, and mostly it takes around 2 to 3 months once you file this for them to analyze, call us, and then do the needful. And the penalties, we've seen all the other cases also. So we can't quantify, but it is not something sizable.
Got it. And this settlement, what would it be exactly pertaining to? Like, what issue? Because I remember sometime in Feb last year you had given a disclosure about what the SEBI forensic audit, what was the scope of that in some sense. So what are the issues that we're exactly settling for?
So basically the major issue was non-consolidation of Merino shelters and some disclosure delays, due to which was the issue. Other than that, there is nothing else.
Got it. And sir, we are embarking on a very fairly large capex program, and these are towards categories that are more lucrative, but also new categories for us. So my question there was twofold. One is, do we have the management bandwidth, to kind of successfully execute on this? Are we, in the process of hiring people, or is that something that we've already done? So more color on, the bandwidth to handle this large capex that we are undertaking. And secondly, these are new categories, for us. So, there are already players who are doing it. So how, what would you say is, why, the reasons why Man Industries, should succeed in this? Why are we well placed here? If you could give some color around our right to win in these new categories, that would be helpful.
Number one, regarding the manpower, we've already executed the ERW mill, which is going to be up and running. It's already up and running and in trial stage. Regarding the SS seamless tubes, we have already appointed specialists for that particular business. And end of the day, we are running 12 to 13 plants. So we have a capable enough team to expand and grow. And we always take the specialist people for a particular project whenever we are expanding. So regarding the manpower and capability, I do not see any issue. And regarding the product, ERW is the same product which we manufacture elsewhere. It's just a smaller range for city gas, which we were lacking for many years. So we've completed that product range. And SS seamless tubes we were considering since some time, as it's the same tubing business only and piping business. So that is why it's not much of a completely different sector that we are entering into.
And I understand that in ERW the customer segment could be very similar, but in the SS, the customer segment, there would be some overlap, but there are also a lot of new industries we are catering to. So how long do you think it would take to get the customer trust and approvals there?
So it's a product over there. So basically, customers' trust and customer approvals will take its due time between 3 to 6 months, which any business setup when you do a new one, there is no entry barrier as such. So, and majority of the clients, including L&T and big companies, are common. HP.
Got it. And just one final question from my end. Our existing saw business, right now I understand there's a bit of overcapacity in the industry, so our utilization levels are lower. But what is the normalized EBITDA margin one can expect from the saw business?
10 to 11%.
10 to 11%. Got it. Okay. Great. I'll just join back in the queue if I have any other questions. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have a next question from the line of Meeraj from Arihant Capital. Please go ahead.
Hi, thank you for taking my question, sir. I just had 2 questions. First one is on the volume side. If you could give us the details of what are the volumes that we did in the quarter in ELSA and SSA. And the second one I had on the stainless steel, where I believe the capacity is coming in the end of FY24. I just wanted to understand, we are aiming to export this product while there is an import substitution play also going on. So just wanted to understand our thought process on these 2 questions.
Mr. Neeraj, the most of our SRW, LSRW, the intershifting is always there because some sizes coming in ELSA, some sizes coming in ELSA. So every quarter, every year, that quantity shifted from here and there between ELSA and ELSA. So difficult to announce what is the capacity utilization. We have to see the overall capacity. As regard to ERW, the new capacity, most of the clients are same. Regarding export, the export is mostly in the ELSA segment by the oil and gas company throughout the world. We have the approvals from around 23, 24 countries where we get the regular. So one thing is good. Again, the government of India has started the road tape facility, which was discontinued for 2 years. So some incentives already they introduced 1%, which also helping to get more market, which was paused last year. So again, it is restarted. So we hope to get the ELSA business much better in international market.
Right, understood. But sir, on the SS stainless steel pipe side, we are planning to export, if I'm not wrong, we've got orders from Japan. But your peers in the same industry are playing on the import substitution idea. So if you could just talk about that, are we going to go that in the future? I do understand that the line will be coming in another 15 to 18 months, but if you could just give a brief on that if you have something planned.
Yeah, the SS, most of the business, we hope to start in a year time because of the lead time very high of the critical equipment. We already placed the order. Regarding import substitute, because of China were sending some goods to India, and India was doing some process and re-exporting. Now the European Union already put the ban. So, but now the primary producer, like we, which we make the mother tubes and mother metal, will have the advantage, much greater advantage to export without any problem. So only process and giving the some form which is not allowed world market. That's why, and the import substitute, because from China now it's difficult to import for this purpose. So it will help to import substitute as I use this tool.
Understood. Thank you for the answers, sir. I'll get back in the queue if I have any more.
Okay, thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a question from the line of Aman Thadani from Solidarity Investment Managers. Please go ahead.
Hello. Thank you for taking my question. So my first question is, sir, how much debt are we yet to take for the new capacities?
See, Aman, so far the ERW is concerned, that project has already been completed. And the SS project which I am talking about, the total project cost would be around 500 crores, for which we have sanction line of 340 crores in our wholly owned subsidiary.
Okay, so the remaining part would be funded through internal, am I right?
Yeah, this 150-160 crores would be from our internal accruals over a period of time, next 2 years.
Okay, okay. And my second question is that what's the update on Man Infra shares and any formality that remains from our end?
Amal, the problem is here because of the record date we already called, and the court, there is a court order not to go ahead on this process. But as regard to main industry, completed all the formalities and given to the court. The matter is sub judice. That's why we do not want to much comment. We hope it should be clear very soon. We are trying.
Okay. Sir, my next question is that what is the order book status as of now, and any update on the $100 million export order that we spoke about in the last call?
Yes, sir. Today we announced around 500 crore new order, including around $45 million the export order, roughly. And this is a part, and the part is coming as per our bid book position and different evaluation stages it will come also.
Okay, so the current order book size as of now would be around 800 crores. That is 500 crores of the existing order book plus this $45 million. Am I right?
No, sir. 500 crore, including 45 million.
Okay, okay.
The new order is, and the rest of the around 200 crore is balance. Total order you can say around 700 crore.
Okay, so the balance, so it would be 500 plus 700, or the total would go to 700?
Total 700, excluding whatever the turnover of 1.5 months roughly, we excluded, so it is coming to around 700.
Okay. Okay, got it. And so my next question is that we didn't consolidate Merino basis a legal opinion from our advisors. It was mentioned in one of your concalls. So can you just explain what the legal opinion was?
Actually, the matter started, the company when we split it, demerged of Men Infra in 2015. Then the splitted group, they challenged the valuation of the company, which we split it, not as the main industry, the main infra, which is not in our control. Then subsequently court, they gone court, after giving the vote in favor of the scheme, they challenged this thing, which is pending in the court, and the court has given instruction not to go ahead. and they will listen to this. So whatever I told is the record date, and this scheme, both are the same coin, the two parts of the same coin. Both are related.
Okay.
Any clarity you need further?
No. That is it. And so I just have one more question. Since most of our bad debts are related to delayed deliveries, so any steps that we are taking to reduce the delayed deliveries?
In the current year, there is not any significant case of the late delivery. In last 2-3 years, because of the COVID, there is no government directive clearly. So some matters is going on. We are talking to the government to get some waiver, some arbitration, some waiver. That's why we are trying to recover our money.
Okay. And sir, my final question is, what percent?
Things were beyond our control. Because of the COVID. Some cases we got the relaxation. Some cases we are getting in future.
Okay. Okay. And so this delayed deliveries, is it a normal part of the business that one should expect?
Delayed delivery is basically the contractual terms. Basically, if the contract is not been complete in the contractual timelines, then according to the contractual definitions, they deduct the amount on account of delayed delivery as per the terms of the contract.
Okay.
But our endeavor is always to complete the order well within the time, so as to avoid an unnecessary waste our time for negotiation and taking up the matter for waiver of time from the client.
Okay. And sir, my final question is, what percent of the interest is BG and LC opening charges versus the interest cost?
LC BG charges, no, it is not linked with the interest. They recover bank guarantee and LC charges. And that ranges from 0.5% to 1.2%. And so it is from because our facility is from consortium or banks.
Every bank having a separate agreement.
So let's say in a year, so if I look at the FY22.
I request you to come back in the queue, sir.
Okay, sure. Okay. Yeah.
Thank you.
Yeah.
Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Siddharth Mohan from Maharaja Products. Please go ahead.
Hello. Sir, what is the order book portion of the company? By when we will get executed?
Your voice is not
Can you repeat please again?
What is the order book portion of the company? By when will it get executed?
Yeah, one of the investors I already replied, the new order of 500 crore, the old pending order which is coming around 200-300 crore. So total order book is approximately 780 crore, approximately.
Sir, when will it get executed?
You can consider is the next 4 to 6 months total.
Okay, sir. Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Meeraj from Arihant Capital. Please go ahead.
Yeah, thank you for taking my follow-up question, sir. As you just said, current order book is close to 700 crores. How much of it would be from the water pipe segment? And if you could also just explain the difference in EBITDA per ton margins you earn from water and oil segments. If you could just highlight these two.
Yeah, Neeraj, the 50% out of 700 crore you can say is export, and 50% is a mix of oil and water.
Okay, understood. And sir, if you could give a highlight about which one would be more lucrative?
Always oil and gas sector having the high value additions, coating, different kind of things. Always they have more EBITDA than the waterworks, a known fact in the industry.
Understood. Okay. Thank you. Thank you for answering the questions.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a question from the line of Aman Tadani from Solidarity Investment Managers. Please go ahead.
Thank you for taking my follow-up question. So, sir, coming back to the last question which I asked, sir, is BG and LC charges a part of the finance cost in PNL?
Yes. No. Finance cost.
Yes.
Part of it.
Yes, Aman.
Okay. So, sir, can you give me a split like in FY22 I see 37 crores of interest. So, can I get a split between what would pertain BG and LC charges out of this?
See, around 10 crores of pertains to LCBG charges. Some bank charges like processing fee and other bank charges. And major portion is on interest, basically on working capital facilities and some loans.
Okay. This explains well, sir. Thank you so much.
Thank
you. A reminder to participants to press star and 1 to ask a question. We have a next question from the line of Manisha from Solidarity. Please go ahead.
Thank you for the opportunity. I had two questions. One is that, they have a lot of debtors in arbitration right now. So theoretically speaking, if I look at your debtors as of September, how much should be ones that theoretically we might have to write off in the future? While we are contesting this and hopefully we will get all of it back, but can you give us a broad range of what we might have to take as write-offs over the next 2 or 3 years?
Manish, good afternoon. Manish, it's a very difficult question you are asking. We cannot predict what will be that. Some matters are under settlement, some matters arbitration, some matters we have gone to the government to get the waiver for COVID. Somewhere we are already successful, somewhere we are still trying. It's very difficult to announce what would be this thing. But one thing is very sure. Now everything timely delivery is started. The past 2-3 years there was difficult, and we cannot say how much money we are going to put in the bad debts. This thing is very, very difficult. But of the company endeavor and total, we have to recover our money because there are some Supreme Court decision in the force majeure, and some oil and gas company, if they have not made any loss because of our supply delayed, they are not supposed to cut the penalty. So there are Supreme Court 3 decisions also there in last 2 years. We are trying to use this to recover our money. So we are trying our hard to recover all the money.
Okay, very clear, sir. Just I understand your perspective and I hear where you're coming from. I think just the challenge is, sir, that every time when one sees write-offs, you always wonder about the accounting policies being followed by the company. So, I don't know how to think about it, but I understand your perspective. My second question and last question, sir, is that now assuming you can fill with SEBI in SEBI's time frame, but if SEBI told you not to, if SEBI's issue is non-consolidation of Merino, but you have got legal advice not to consolidate Merino, are you going to consolidate Merino for FY23? How are you going to deal with this issue?
Anish, situation is like this way. The SEBI is working separately, and Bombay High Court decision is stay order. You can stay order, restraining order, whatever you say is a separate thing. So we have to see both in the combinations. The SEBI cannot insist. SEBI can ask only why you are not done. SEBI cannot say you do it. But if Bombay High Court decision, which we are expecting very soon, maybe on out of priority, the top priority we are taking up our law firm, which is coming, and then then we'll do the consultation as per the law. And also we will give that what is the total impact. Last 7-8 years, the total impact coming very minimal. Not even of the total profit of the last 8 years, even the 0.5%. So we are confident we will resolve this issue. And apart from non-consultation, there is not any major issue with SEBI. Whatever we already replied to them and trying to settle down the issue. So very soon, I think next few weeks, you will get something. We hope to go to positive manner.
Okay, sir. Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. Participants may please press star and 1 to ask a question. As there are no further questions, I now hand over the conference over to management for closing comments. Over to you, sir.
Yeah. Thank you all participating in this earnings call. I hope we were able to answer your questions respectively and at the same time offer insights into our business. If you have any further question or would like to know more about the company, please reach out to our investor relation manager at Velorum Advisors. Thank you. Stay safe and stay healthy. Thanks.
Thank you. On behalf of Man Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.